Welcome, everybody, to the Let's Learn with Advent series. My name is Advent, of course. I am not a financial advisor. Anything that you guys see in this session or any of my future video or contents is not financial advice. It is simply for educational purposes only, so we can all learn together. Trading does have its risks, so please do your research before you engage in trading. So for those who are new to the series, essentially, I hold these once a month, in this case for Flips Group. So you can ask me anything you want, whether it's if you want to get into trading, if you've been wanting to expand your trading and improve on it, pretty much anything goes. To give you a little background about myself, if you don't know about me, I've been trading for almost 5 years now. I mainly trade options and futures. I started out trading penny stocks and like regular equity or stocks. And then I discovered options. And then from there, met a few mentors along the way. And I trade futures and options now. The main strategy that I use is the Strat by Rob Smith. If you guys go in, let me actually share my screen. Let's bring this up. If you guys go into the Discord and you go to the Advent's Alert section, if you look at actually, I don't think it's in the pin section. I got to ask Flip to pin it. But if you go all the way to the first post I ever made, it gives you a background about myself and where to get started if you are new to trading, just to get, the ball rolling. And information regarding how to read the watch list is in there as well as the strategy that I use, and I placed it there. So with all that being said, what questions do you have? And any question is allowed. There's no judgment. Don't ever feel like you're asking a silly or stupid question. There are no stupid or silly questions in this business. Anything goes. You can type it in the chat. You can come off mute, whatever you prefer. Welcome, Kia. Let me bring up a question that somebody asked earlier. Somebody asked about options trading in general, which is why I always ask in the questionnaire, please be as specific as possible, because when it comes to options trading, that is quite an extensive question to answer. Do you want to know about options in general? Do you want to know about option Greeks? Do you want to know about options chain, the contracts to choose, so on and so forth? There's a lot to go into in that. If you did have questions regarding the options chain, if you go on my YouTube channel, Cerulean Mind Academy, and you go to the playlists section, and you go into, I think I put it in the trainings. Yeah, if you go into the trainings, I have the first video, Understanding the Options Chain in Greeks. That'll give you information there. But again, because you were super vague, can't really answer that question properly. If you don't know what options trading is, to keep it as simple as I can, you are essentially trading. So option trading is just another instrument that you can trade similar to Forex, crypto, equity, futures, etc. But what you're doing is you're trading the option contract on whatever it is that you're trading, whatever stock you're trading. So if you, let's say you want to make money when the stock goes up, you can buy a call option. If you want to make money when the stock goes down, you can buy a put option. So you can make monies both ways. It's not just up, which is fantastic. And if you want to learn more about how the Greeks and all that stuff works with the contract, look at the YouTube video that I mentioned earlier. Somebody also mentioned they're struggling with investing. Now, if you mean investing and not trading, again, pretty vague. I can't really answer that question properly. I'm just going to have to make up examples, and hopefully that falls into what you're asking. But essentially, if you're struggling with investing, again, please be more specific for next time because I can't help you if you're super vague. So with investing, you generally want to keep it simple. Of course, since I can't tell you what to do since I'm not a financial advisor, you'll have to do research and depending on what you're aiming for your portfolio. Are you looking for more growth in your portfolio? Are you looking for income, like a dividend income portfolio, a mix, so on and so forth? And just do some research and see which, works best for you. For me and my portfolio, for my long-term investments, generally it's probably like 80% dividend stocks. If you don't know what a dividend is, essentially they pay you to own the stock per share. So let's say for the sake of the conversation, let's go to Apple as an example. And let's turn all of this off for now. So for Apple, they pay a 25-cent dividend every quarter. And every quarter is essentially every 3 months. So every year you get $1 paid to you for owning Apple stock per share. So if you own 100 Apple stock or Apple shares, you'll get $100 every year just by owning the stock. You don't need to do anything. Some other examples for those who love Starbucks. Starbucks pays 57 cents a quarter, which is $2.28 a year. So essentially, for every share that you own, you get roughly $2.28 a year or 57 cents a quarter every time they announce a dividend. And again, you don't need to do anything. Just leave it in your account. As long as you have the position in your account by the X dividend date, which they'll always announce, you'll receive the dividend when they pay it out. So in this example that we see on the chart, the X dividend date was Friday the 16th of last month. As long as you own the stock by that date, you'll get paid out on the 30th of August. So you can look into that when it comes to, dividend stocks if you want to. And there's a lot of them. These are just some examples to get you started. Something to note, if you are going to be aiming for a dividend portfolio or mainly a dividend income portfolio, if there's a stock that gives you more than 10, 20% dividend, not necessarily that is too good to be true. More so the principal or the amount of money that you put in is going to decrease and the dividend payments are not going to really make up for the loss. For example, TSLY, I think they pay like a 10 to 12% dividend a year, something like that. As we can see on the chart, it looks horrendous. So whoever bought up, let's say somebody bought all the way up here at about $40. Right now, the stock is sitting at $12.17. So in your initial position, you're down 70%. And this stock has only been active paying dividends for about a year. So even with the 10% or whatever it pays now a year, you're still down about 60% from the original investment. So just be mindful of stocks that promote high yields above 10%. I think conservative people usually aim for 2 to 3%, which is usually safer. 5 is about like medium, and then anything of 10 or up will be a little higher risk. So just keep that in mind. Cool. What other questions do you guys have? Any questions, go put it in the chat, come off mute and you can talk. Anything is fine. Any questions at all? There's no stupid questions. It could be about anything trading related. I'm also a life coach, so if you want life coaching advice, or not advice, but guidance, I can do that too. Put it in the chat or come off mute. I'm here for you guys, so if you don't have any questions, we'll just end it early, or I'll just awkwardly sit here for the next 10 minutes. If there's nothing in the next 10 minutes, we'll just end it early. I have a question. How would I be able to do a setup on QQQ 30-minute ORB? Could we take a look at that? Absolutely. So this is QQQ on the 30-minute chart with regular hours set up. Let's label this real quick. Would you be looking to take it to the downside or the long side or both? Or either way that it breaks?
Either way, both.
So looking at this is long above and short below. So in this case, if QQQ opens up in this area right here, within these two ranges, if it breaks above that, I will go long as soon as it breaks above that level. I'm not going to wait for a candle to close because it's going to be too late. So as soon as it breaks above 450.70, I'm going to go long. If it goes short below 448.19, I will go short, but just be mindful there's broadening formation right here, which is support and resistance for strat users. So you may want to trim some profit at this level, just in case it bounces and reverses back up. Now, these levels are only to be taken for the regular trading hours, meaning if you trade regular stock and this breaks pre-market, I personally wouldn't get in because I'm only trading the New York session from 9:30 a.m. Eastern to 12 noon. So something to keep in mind.
Yes. Basically they were saying that you should, do it between like 9:30 to 10:30 within that hour frame.
Yeah. Sometimes you'll get it where price just kind of just does nothing. And then eventually it breaks through one of the levels. Me personally, I would trade both sides. So if it breaks above this level and it hits a target and then also breaks this, I'm going to take it both ways too. For example, I think Tesla gapped up though. Yeah, Tesla gapped up in this case. So let's get rid of some of these lines. So for Tesla on the watch list, the long above level was here. So you would buy calls, or if you're trading regular stock, you would buy stock as soon as it breaks that level, or you would short below or buy puts under this level. So let's go to the 30-minute to get a clear picture. So this was from Thursday into Friday. So in this case, I would not have bought calls or went long because we gapped up. The candle opened up here above my level. So I would leave that alone. I wouldn't even trade it because let's say for the sake of the conversation, your target is you're aiming for these highs over here. So let's say you trade something like this and you're aiming for that. If I get in as soon as it opens up above my trigger, my take profit or my reward is being reduced and my risk is being increased. So I'm not going to take that at all. I'm leaving that alone. So instead, what I would do on Friday, as we can see, it gapped up, came back down, and then it triggered short once it broke that level. So as soon as it broke that short level, I would have went long and short immediately. And let's go on the lower time frames. This is the 5 minute. So in this case, once it broke that level, you pretty much had continuations to the downside, and it went like almost $4.50 in your favor. Super solid trade. Looking at the watch list, I also provide levels only really for Tesla, because that's what I mainly trade when I trade options over here. For the other tickers that we have here, I just leave it up to the individual to determine what targets they want, or whatever trading plan you want to tie to these levels. For those who trade the strat, it's pretty straightforward where you're going to be targeting, and those who work with me and my students. However, if you're new to the strat, like I mentioned, just go on my YouTube channel, Cerulean Mind Academy. And then if you go to the strat playlist, I think I have it here. So if you go to my channel, it's Cerulean Mind Academy, go to playlists. Well, if you go to the strat, it shows pretty much the entire strategy, beginning to end, and exactly how to trade it and use it. And after you go through that, it'll make more sense when you look at my watch list levels and how I get them. So for Tesla, since I mainly trade that, I provide levels for you guys for guidance. So something to keep in mind of. Did that make sense on how I would take the opening range break in relation to this?
Yes.
Cool. Any other questions on that?
When we're doing the options play, when I go to make a selection, like when I go to trade options, there are certain different price ranges and so on. How would you know which option to jump into? I mean, I see that you do your levels and so on. Is that what you use? Is that what you look at to determine your, what option play you're going to jump into? Because you have so many different prices and so on. Is that what you look um at the end of the day to see?
So
I just the right. I'm asking the right question.
I understand the question. I'm going to ask another question to make sure I'm clear on it too. So when you say like, what do I choose? So we're looking at the options chain right here. Do you mean like what strike prices, which specific contract to choose?
Yes. Yes.
Cool. So when I'm trading, actually, let me ask you this question first. How familiar are you with like option terms like the Greeks and delta, gamma, things like that?
Not
Or
very familiar.
yeah, so if I said an at the money contract or in the money or out the money, do you know what that means?
No.
Cool. So let's take a quick little side lesson before we go into your question. So let's type some stuff down here. So there's going to be ATM, which is at the money, OTM, which is out the money, and then there's ITM, which is in the money. This is in relation to the strike price, the strike prices that we choose. So if a contract is out of the money, that means that it's really far away of the current stock price. So let's say we have Tesla at 205, and let's say we'll see right here on Thinkorswim, my option chain, this is the 205 strike price. And the price of the stock is 210.73. That's the price that it closed at on Friday. So I would consider a 205 contract to be an out the money contract, meaning that it's far away from the current price of the stock. If it's at the money, that means it's very close to the current price of the stock. So let's say if the price is 210.73, if I choose a strike price that's like 207 or 210, that to me, I would consider that an at the money contract. So it's close to the current price of the stock. An in the money contract means that the price of the stock has already surpassed the strike price that you choose. So for example, for the put side, if I'm looking at Tesla, if I choose a 212.50 put, that put is in the money because the price of the stock has already surpassed that price to the downside. However, if I'm looking at 212.50 strike on the call side, it is at the money because it's close to the price of the stock. Does that make sense, the difference?
Yes, it does.
Sweet.
Thank you.
So when it comes to choosing the strike prices that we want, me personally, I'm really aiming for at the money or in the money contracts. So if I were to trade Tesla, being the price is 210, I'll probably go for 205 for the put side, or I'll do 212.50 or 215 for the call side based on the current price. I'll share with you guys an example of a swing trade that I'm in for GameStop. So in this example here, I took this break above the last, not this past week's candle, but the one prior, which closed as a hammer on the weekly time frame. So as soon as it broke that level, I bought calls. Generally, I was also looking at the monthly, which it closed as a hammer compared to last month, which is an actionable signal or a reversal signal. In this case, I'm using the previous candle highs as my targets. So my first target is 25.98 based on the weekly target. And then the next target is going to be, let me actually label this. This will be target one, monthly. So this is the monthly target. This is the weekly target. So this specific trade, I chose the 30 strike price because since it's going to be a swing trade, I'm going to be holding it for a lot more than normally. So in this case, I chose a 30 strike price because by the time it hits my second target in this case, or the first target for the monthly, it's going to be close or even in the money if it goes above 30. And it's not too expensive. So, and I chose a contract that was expiring 30 days out or 47 days out. Right now, we're about like, I think 37 or 38 days out to expiration. It's also important that if you're going to be swing trading, you want to have time on your contracts. Because if I got a contract that expired the same week, last week, my position would be zero because it didn't move in my favor and it didn't hit or get close to the strike price. If I'm day trading, I'm only gonna go ahead.
Um, back up.
If I'm gonna be day trading, I'm gonna use the same week expirations. So looking at Tesla here, these are all the expiration dates. So if I'm going to be day trading on Monday, Tuesday, Wednesday, Thursday, I'm going to be using just the same week expiration because I'm going to be in and out the same day. I don't really care about data and things like that compared to when I'm swing trading. So just something to keep in mind. I use same week expirations if I'm day trading. If I'm swing trading, depending what time frame I'm taking it off on, I'm going to be getting anything that's 30 or 45 days or longer, depending on the time frames that I continue to trade on.
I'm so sorry. My phone went. I didn't hear a word.
What's the
I
last
apologize.
what's the last thing you heard?
I remember asking the question and then my phone just went and I started reconnecting. I didn't hear. I'm sorry.
Oh, gotcha. All right. So did you hear about the at the money contracts and things like that?
Yes, you mentioned at the money, out of the money. You mentioned the hammer. You said it's in a for the GameStop. You said it's a signal, a reversal signal. Um, and then you are looking at GameStop. Are you looking at that in the weekly time frame? I think that's what you are looking at it in,
This is the
correct?
week right now. I got the original trade idea
Right.
for what you triggered here. So because
Okay.
the first target on the monthly was close to $30, that's why I chose the 30 strike price. And because the one that were at the
Gotcha.
money was too expensive, they're like 1,000. I don't want to spend 1,000 for a contract.
Right.
So in
And
this,
that's when I asked the question.
so let's say for QQQ with your question for Monday, if I were to take the short level over here, I would probably choose a contract that's 50% or less of its ATR. If you don't know what ATR means, that means that's an average true range. That's how much a stock moves on average. So QQQ on average moves $9 a day. So I'm going to choose a contract that's within 50% of that. So I'm not going to choose a contract that's more than $4.50 away from the trigger price. So if I were to get in here, I'm not going to choose a contract that's more than, let's zoom out a bit. I'm not going to choose a contract that is more than 44.38. So if I go here to QQQ,
Mm,
also, I don't trade 0 DTEs on indices. I only trade one DTEs minimum. You can go up to 3 if you wanted to. So this is going to be Monday. So I'll be doing the Tuesday contract if I were to trade this. The contracts are expensive right now, but once Monday opens, the theta is going to take away a lot of this price here. But for the sake of the conversation, I'm not going to go more than 443.68. So looking on the put side, the furthest I will go out for the puts is going to be 444. That's the furthest contract that I'm going to choose for the puts.
mm, mm,
Because
mm,
people are like, oh, well, let me just let me bring all of them up. They'll be like, well, let me go choose this 435 contract because it's so cheap. But that's about $12, $13 away. And QQQ doesn't move that much. Not only
mm,
that, just because it's cheaper doesn't mean it's good, because theta is going to kill the contract a lot more. And when it's volatile, it's going to kill the premium of the contract. So a good example that I like to look at is this. Let's say you get in here, that's 0.53 on the contract that you paid for. $0.53 or $53. Everything is multiplied by 100. Let's say your fourth target, and let's say the second target gives you 100% return, which will be about $106 value on the contract. Or I can get in at the money contract. Let's say I might pay 250, and at my first target, it might be worth 350. Let's say 310, and let's say 350 for the sake of the conversation. So I made more than I did here by getting an at the money contract. The percentage is higher on the out the money, and the percentage here is what? That's what, 40% return on my position from 250 to 350.
mm,
So I'm making more money even though the return is less. And if it gets a little choppy or volatile, my contract is not going to lose as much premium as an out the money contract. Because if it goes against you and then it goes back in your favor for an out the money contract, you're probably still going to be red. So I prefer to get at the money or in the money contracts. If you don't have a big account, you can consider trading IWM. Those are really good for smaller accounts. And at the money or even in the money contract will be between like $70 to $110. So cheap compared to the other ones. That makes sense?
Yes, it does. So if you have a small account and you want to build, you're saying IWM would be the best bet in terms of contracts, getting it at the money or in the money. How then would I go about looking at that for trading? Is there a particular thing with IWM, just like you were saying with QQQ, the money moves like $9 for the day? Is it the same with IWM? Does their money move $9 a day, or is it a
Less.
little bit? It's
It's
less.
$4
Okay.
and 20, like about $4 and change.
Okay.
IWM
Okay.
isn't as volatile as QQQ because this is mainly small caps. QQQ is just tech.
Gotcha. Okay, so with volatility, is that I mean, when stocks are volatile, I know that it goes up and down pretty fast. So
Mhm.
then you would probably have to be sitting there at your computer watching IWM. Well,
No,
unless you put in your stop loss and so on, correct?
yeah, you don't need to sit. You can just automate everything. Because once I get in a trade, I don't need to do anything. I just set my alerts, set my alert here, or my stop loss alert, whatever it may be, and just program it into the computer and walk away. I just wait
Gotcha.
until something happens. I don't need to sit and babysit.
Gotcha. Okay.
Something to note as well is I mentioned this in a trade recap class that I had yesterday. If you're new to trading and you're just new to whatever it is that you're learning, don't use your real money. Paper trade, use fake money as you learn, especially for options, because it can go south really fast if you don't know what you're doing. So if you're new to trading or you're learning something new, paper trade for a bit until you get comfortable and you get some consistency in your paper trading, and then use your real money. Because what I don't want to happen to you guys that I see a lot that happened to me is when people start trading, they use their real money and they use a lot of it. Why? They don't have the proper guidance. And what happens is with people is they shred a lot of money and now they're building psychological trauma, to be dramatic, around money and losing it. So now when they finally learn how to trade properly and they're using their real money again, they immediately panic because their brain is so afraid of losing money because of what was happening before. You don't want to build those emotional scars if you don't have to. That's why I always emphasize, if you're new to trading, find yourself a mentor or paper trade until you know what you're doing, because it can go south really fast. And I have heard in a ridiculous amount of horror stories, people that I've worked with and on the internet. To share some, and I'll keep people anonymous for obvious reasons, there was somebody that I was working with, and they probably spent close to, for those who know about prop firms, they probably spent about $15,000 in fees, never got one payout because they wouldn't listen. Also, another thing, if you're going to hire somebody, listen to them, because if you're paying somebody to help you and you're not listening, you're wasting both our times. Anyway, so that's one story there. And he went into debt and he continued taking out more debt to pay for trading. And you can't trade in those conditions at all. That's like recipe for disaster. If your life is chaotic, do not trade. It's not the time. You can learn how to trade as you get your life in order, but don't trade if you need trading to work or if it's like the last Hail Mary. That you're setting yourself up for failure. I'll tell you that from experience and people that I've worked with. So keep that in mind. The way I structure all my students when I work with them, the first 2 weeks to a month is just paper trading. As I teach them all the material, what to do, what not to do, so on and so forth. We build up their system. And then when I see that they're consistent and they're understanding what we're going for or learning, then I have them get out of paper trading and use a little bit of money starting out, and then we'll build from there. So something to keep in mind as, you know, to guide you properly in your trading journey. And one thing that I also mentioned, I'm not sure why this is a thing in some trading communities online, specifically Reddit, where they'll say like, oh, don't get a mentor or somebody who teaches or this, because it's just a scam and X, Y, and Z. That blows my mind. I understand it because yes, there are a lot of scammers out there. But if you look at every successful person in life, if you want to look at the CEOs of every company, pretty much anything, what do they all have in common? They all have mentors. So yes, you can learn how to trade by yourself, but it's going to take a really long time. So the idea that it's a waste of time to get a mentor, to me, that's silly, because yes, I can learn all of this. It might take me a year or two, but what if working with somebody can save you half a year or months or years? So something to think about. Cool. We have 15 more minutes left. Any other questions that you guys have?
I have another question. You mentioned about mentoring and so on. What's your price range?
So for me, if somebody's going to get a single session, I charge 250. However, what I would actually prefer, I'll bring it up on the screen. I just launched the futures component to my futures and options course. So the launch price, which is 197, this is going to end on Monday. It's going to go up to the regular price. So what I would prefer is that people get the course, because you can go over all the material. Let me bring it up here. You can go through all the material that I have laid out here in the course. And then once you go through it, then we can set up a session, which a session is free when you get the course. You get a free one-on-one session with me. So you can go through all the material so you can have a proper foundation, because I would prefer us to have for us to maximize our time together. I'd rather not somebody just get a session, because I can go over a million things in a session and we might not have enough time. But with the course, it goes over everything that I teach, exactly how I trade, and it'll answer a lot of questions. And you can also ask me questions as you go through the material. So just keep that in mind. So if you want to work with me, you can go the course route. You'll get more value for your money, and it's better for you because you'll have a solid foundation. Then after you go through the material and of course all the questions that you ask me, then we can set up a session to go in more detail on specific things that you want to go over. Because again, I can spend one session just talking about strategy, just talking about options, when all of that is for you in the course. And if you want to work with me and get a better idea in that same, I think in the coaching one here, if you scroll down, you can click on this discovery call. There's a free 30-minute call that you have with me, so I can see how I can better help you, and we can go from there. I posted the link in the Zoom chat. Hopefully that answered your question.
Yes.
Cool. Also, something to note, as I always tell people, if you work with me, don't ever feel like you're asking me too many questions. I'm literally here to help you. So the more questions you ask, the better I can help you. So something to keep in mind. Don't ever feel like, oh, I'm bothering Advent with all these questions. I'm literally here to help you and get you where you want to be in your trading journey. So the more questions you ask, and my best students have asked me the most questions. So please ask as many questions as you need to. There's no silly questions, nothing like that. Any question is valid. Any other questions you have? Cool. Looks like no other questions. Before we wrap up, I always do this with all my classes. What was your biggest takeaway, or what was the biggest thing that you learned in today's session? And for those watching the recording, you can type in the comments what you learned today that you didn't know before, or something that you're going to take away from today's session.
Well, for me, um, we talked about the ATM, which is at the money, OTM out of the money, IATM, which is in the money. Um, you you talked about the hammer being a reversal signal.
Mhm.
Um, and I thought that was pertinent information.
Excellent. Where do you know me from? What group? Is it the Flip group, or a different one?
No, a friend of mine had recommended you.
Hmm,
So I think we're both on here. So every minute, every now and again, she tag teams me. She tells me, okay, we're having this and we should get on. So here we
sweet.
are.
Excellent. Glad to have you. What are some struggles that you're having in your trading? I'll give you a 4-minute coaching session before we wrap up, and I'll give you.
No. Oh Lord. Oh Lord. Okay. Um,
Remember, no judgment at all. No judgment at all. I'm here to help you.
well, to be honest, I think one of the things that I'm struggling with is, the thing that I've asked about, being able to choose which option, which contract. Um, I've had experiences where, but I've traded very small because I'm still trying to. I realize with options, the money really can go real fast. So I can attest to that. It goes real fast. I mean, so that's another thing that I have to contend with. Um, Holding on and hoping that it will go up or go down the way I want it to. Stuff like that. So I guess the psychology of it, I have to get control of my emotions. Are you hearing me? I don't know if you're hearing me.
I'm
But
hearing you.
okay, so yeah, so that's those are the things that I contend with or I grapple with. Um, so I like you said, I have to be able to trade with doing the paper trade. That's something that I'm going to have to really implement
Mhm.
until I'm comfortable because I'm not really comfortable with options. I'm really not. But then when on the flip side, I think of, okay, if I do just do regular trade, will that build my portfolio the way I want it to? So those are the questions that I ask myself. So then it goes back to probably not, and I have to probably think about doing options. You know what I mean? So that's kind of where I'm at.
Gotcha. So, first and foremost, the word hope no longer exists in your vocabulary, because once you start hoping when you're trading, you're no longer trading, you're gambling. One thing that'll help your like being emotional and like getting so afraid sometimes is once you learn properly and know what to look for. The market is programmed, it is not random. I'll give you an example. Here's one of my best setups that I look for. What time frame was it on? I think it was on ES the other day. I didn't take it on ES. This is just an example. So this here, I just call it the W trade model. Pretty straightforward what it looks like. push up, or push down, push up, push down, push up. Pretty much looks like a W. That's one example. Let's see if we can find another better one. It's a little cleaner. Oh, the 15-minute one had one. Here's another one. Granted, this one I don't prefer because it has a lower low. I prefer the one that has a higher low, like the first one that I showed you. So there's the one that I just finished showing you on the 15-minute right there. You got a W. This one I wouldn't consider because the higher low is too high for me. I'm very picky with how they look in the ones that I take. There's another one here, but this one is dirty looking. I don't like that one. Let me make sure that I'm on regular trading hours. There we go. Much better. There's one right here, just not the one that I would prefer to show you. But just a quick example, as I mentioned, the market is not random, it's programmed. You just need to find the programs. And then once you do, you can determine how to trade them and things like that. Even with this setup, if you go to the YouTube channel and you go to playbook setups, I have that specific setup in there and what to look for and how to take it. Another thing is that I want to point out is that your focus is on the money, on what you were saying, the language that you were using. If I used regular stock, then I'm not going to grow my account as much. If you're new to trading, you shouldn't be thinking about making money at all. That's not your first goal. Your first goal is to build a solid system and foundation and know what to look for, because that's where the money comes from. Because if you're using your real money as you're learning how to trade options, you're probably going to lose money, which is then going to make you afraid to actually use more money down the road. Like I mentioned earlier, you don't want to build those emotional scars when you don't need to. So always focus on building your system and getting a solid foundation. And then once you know what you're doing in paper trading and all of that stuff, then we can use your real money and take proper trades that are high probability and things like that. If you don't have a list like of how to journal your trades to collect data, highly recommend on the YouTube channel, look up the journaling video that I made. I go over my exact journaling process. It's going to help you be very clear on what works and what doesn't work based on the data that you collect. And what you discover that does work, from there, you can implement it in your trading. And then if you need a proper working strategy, like I mentioned, the strat is right here in that playlist, all those videos. So you can start there. As I mentioned, don't worry about the money. The money is irrelevant to you right now because you don't even have any consistency. You don't have a proper system that you've developed. So that's pretty much all I have today. Hopefully that helps. If you keep me updated in the other classes that we have whenever you join in. And I'm curious about your progress. And I mean that. When I say please follow up, because I'll tell people to follow up and they don't follow up, which usually leads me to believe they didn't listen to my guidance and they blew up their account, which tends to happen. So
No, I most definitely will. Thank you so much. I really appreciate that. I appreciate that. Thank you.
absolutely. So thank you guys again for coming out. I'm gonna upload this video to the YouTube in like probably 4 or 5 hours when it finishes processing. It's going to be in here in the Let's Learn if you want to see the replay. Other than that, thank you guys again for coming out, and I will see you on the next one. Have a good Saturday.